Dear students, we will do a new module, module 42. This is about pre-construction interest. Short form is PCI. So first you have to know what is pre-construction interest. See, usually people will take a bank loan for the construction of the property or for purchase of property even before they acquire the property. Say for example, if I am getting the house property in 25, it is possible that I can get a loan from 2020 onwards. So that meaning we are getting the acquiring the house property in 25, but the loan we have started from 20. So this 5 years, whatever the interest we paid, Income Tax Act is allowing us to claim pre-construction period interest. 5 years is the pre-construction period in this case. So that is advantageous to the SSC to reduce their tax liability. Because once you will buy the house property, that payment, interest payment will be there, repayment will be there, so many problems will be there. So this will be an added attraction to the SSC. So deduction of housing loan cannot be claimed when the house is under construction. It can be claimed only after the construction is finished, that is 2025. The period of borrowing money till the construction of the house is completed is called the pre-construction period. So here it is 2020 to 25. Now interest paid during the year can be claimed as tax deduction in 5 equal installments starting from the year in which construction of the property is completed. So in this case 25, imagine 31/3/25 they have completed. So for next 5 years 25, 26, 26, 27, 27, 28, 28, 29 and 29, 30 in 5 annual installments. Imagine if it is 1 lakh. 1 lakh is the interest payable. So here 5 years. So total interest they paid is 5 lakhs divided by 5. So each year they can claim 1 lakh as interest. That is the concept of pre-construction interest. Now, pre-construction, I hope now it's clear what is pre-construction interest. Pre-construction period meaning the period commencing on the date of borrowing and ending on 31st March immediately before the date of completion of construction or date of acquisition or date of repayment of the loan, whichever is earlier. I'll take another example. See, date of loan is 1/4/21. 1/4/21. Date of completion is 36/23. 36/23. So pre-construction period meaning starting from the date of loan, that is 1/4/21 to this previous year, 31st March previous year. So here 31/3/23. 31/3/23 will be the pre-construction period. We have to remember, see, this date is the date of completion. The March 31st prior to that will be the ending date. So that is the pre-construction period. Now important point you have to remember, deduction is not allowed if the loan is utilized for repairs, renewal or reconstruction. So what is pre-construction period you understood, and the interest is allowed from the date of completion in 5 annual installments. Now we will do 2 problems to establish this. So it's very simple computation. First one is MRV 24 lakhs, actual rent received 30 lakhs. That meaning whatever the higher value will be the gross annual value. Gross annual value is 30 lakhs. 30 lakhs less municipal taxes. Less municipal taxes 24,000. 24,000. So now 24,000 meaning that net annual value is 29 lakhs 76,000. 29 lakhs 76,000 is the net annual value. Now the question is, date of loan is 1/4/21. 1/4/21 and annual housing loan interest is 1,50,000. 1,50,000 is the interest. Interest for delayed payment 10,000. That is not allowed as a deduction. Date of letting the house property is from 1/4/23. That meaning house is completed by 31/3/23. So this is the pre-construction period, 1/4/21 to 31/3/23. Now 3 lakhs, 2 years they paid the interest. So 3 lakhs, 1 lakh 50 into 2, 3 lakhs. That you have to divide by 5, so you will get 60,000. So that will be the pre-construction interest. Now here, date of letting the house property I told you, fire insurance premium due, it is not allowed, 4,000. Ground rent due, it is not allowed. Question is, compute the income from house property for the assessment year 25-26. So, new scheme you have to remember, self-occupied house property, pre-construction period interest is not allowed. But they have retained that for the let-out house property. So, only for let-out house property, as per the new scheme we will compute, it is not allowed for the self-occupied house property. Now, you have to remember, now we know we have to reduce net annual value we got 29,76,000. Now less deductions under section 24. One is standard deduction, that is 30% of 29,76,000. The value is 8,92,800. 8,92,800. Now next is this year's interest. Interest every year they are paying 1,50,000. 1,50,000. Pre-construction interest we calculated as 60,000. 60,000. So total value we have to take, the total value is 11,02,800. So when you will reduce this, you will get 18,73,200. So this is the income from let out house property. Adjustment is pre-construction interest. Pre-construction interest, I will explain once again. Date of loan 1/4/21, date of completion 31/3/23. So pre-construction period is 1/4/21 to 31/3/23. 31/3/23. Now annual interest 2 years. That meaning every year they are paying 1,50,000 into 2. 3 lakhs is the pre-construction period interest. This is divided into 5 installments. So every next 5 years. From the date of completion of the construction, 60,000 they can claim for 5 years. So 60,000 we have included. The next 5 years will be 23-24, 24-25, 25-26, 26-27 and 27-28. All these years they can claim along with the annual interest 1,50,000, 60,000 as the pre-construction interest. Now the second problem, that is the last problem we will do. Mr. A owns a building which consists of 2 identical units. One is self-occupied and one is let out. Construction was completed on 1st April 2021 and the building was occupied on the same date. Details of the properties are as follows. Fair rent 60,000. Let out house property also 60,000. Rent received, self-occupied property, it is not there. Let out house property 72,000. Municipal taxes paid 3,000 and 5,000. Municipal taxes due and paid on 15/6/24, 3,000 and 5,000. Land revenue due but paid on 15/6/24, 1,200. Land revenue we will not allow. Only whatever municipal taxes paid is only we will allow. On 4/20, he borrowed a housing loan of rupees 5 lakhs at 12%. So now, here also pre-construction period is there. Date of loan is 1/4/20. 1/4/20. Date of completion is just 1 year. 31/3/21 he has completed. 31/3/21. Now, you have to remember annual interest. How much is 5 lakhs he has taken at 12%. That meaning 5 lakhs into 12 by 100, 60,000. So pre-construction period is from 1/4/20 to 31/3/21. Pre-construction period interest is 60,000. We can allow in 5 annual installments. So here he will get a 12,000 is the pre-construction period interest. 12,000. So here this year also he will get that because 21. How many years he can claim? 21-22, 22-23, 23-24, 24-25 and 25-26. So every year he can claim 12,000. 5 years. This is the computation. Now once you complete this, it's very simple. We have to provide 2 columns. One is self-occupied, one is let out. This is self-occupied, this is let out. So here, self-occupied up to net annual value, it's nil. Here, fair rental value is 60,000. Rent received is 72,000. So whichever the higher value we will take as the gross annual value. So that is 72,000. Now municipal taxes paid 5,000. You have to reduce less municipal taxes. 5,000. Here everything is nil because self-occupied house property net annual value is nil. So here you will get 67,000 as the net annual value. Now you have to remember less deductions under section 24. Standard deduction only for this property, let out house property. 67,000 into 30 by 100 is 20,100. Now, interest on loan. This year loan is 30,000. And here it is 30,000. 60,000 is the loan. We are dividing into two units, 30,000 each. Pre-construction period is 12,000. We have to divide it into two, 6,000. Now this is as per the old scheme. So here self-occupied house property, loss from self-occupied house property 36,000. Loss from let out house property 67,000 minus 20,100, 30,000 and 6,000. So that is 10,900. So total loss, this you will get, this is a profit 10,900. So total loss from both the house properties 36,000 loss and this is profit, that is 25,100. 25,100 is the loss. So here how you are getting profit, 67,000 minus 20,100, 30,000 and 6,000. So that is how you are getting profit from let out house property 10,900. Total loss is 36,000 is a loss and this is a profit. So 25,100. This is how you will calculate and it's an important component in the examination for income tax. This is what I wanted to explain in this module. Happy learning. Thank you.